So once again, welcome everybody. We are so pleased to have you with us here today. We realize this is quite a stressful time for everyone, and especially with the limited time frame for the submission of carbon tax returns, so that we trust that the information shared today will assist you. LexisNexis South Africa began operations as a legal publisher 85 years ago, and we've been intimately involved in the journey of the legal industry in our country. As a company, we have a proud legacy of supporting the rule of law on a global basis, which we believe is the foundation for the development of peaceful, equitable, and prosperous societies. So advancing the rule of law ties into every aspect of what we do. I first became aware of the carbon tax in 2018, when a carbon tax bill was tabled in Parliament to be implemented mid-2019. My primary area of focus is tax. However, I soon realized that as carbon tax is an environmental levy, imposed in terms of the Customs and Excise Act, but requiring air quality and environmental data collection, a work on carbon tax would require authors who are specialists in a variety of disciplines. So we were so extremely fortunate to have secured this panel of authors who are experts in all of these different aspects. Let me just give you a bit of brief background on each of them. Andrew Gilder is a director of climate legal with nearly 20 years of legal practice experience, specializing in climate change, climate finance and development, carbon markets, carbon tax, environmental and energy law, policy, and governance. Andrew is admitted as an attorney of the High Court of South Africa, holds a BA, LLB, and LLM in marine and environmental law. Our next panelist, Olivia Rumble, is also a director of climate legal and has 10 years of legal practice experience, specializing in environmental law, energy law, policy and governance, climate change, climate finance, carbon markets, and carbon tax. She is admitted as an attorney of the High Court of South Africa and holds a PPE, an LLB, and an LLM in environmental law. And finally, we are pleased to welcome Mansoor Parker as the third member of our panel. Mansoor is an executive at ENS Africa in the tax department and specializes in corporate tax, energy tax, sports tax, and international tax. He advises clients on the various fiscal provisions relevant to the tax treatment of energy, with a particular focus on carbon tax. Mansoor also advises clients on the determination of their carbon tax liability, including the various statutory mechanisms which are proposed to enable carbon tax liable entities to reduce their ultimate liability. These three authors have managed to make the October launch date against extreme odds and produced the first and only guide to carbon tax in South Africa, the Concise Guide to Carbon Tax. This will not only assist many people to complete their carbon tax returns by the end of October, but also serve as a valuable reference for many years to come. So huge congratulations to Andrew, Olivia, and Mansoor. I hope this will be the first of many titles you publish with LexisNexis. I will now hand over to Andrew, who will introduce and take us through the Concise Guide to Carbon Tax.
Thank you very much, Sarah. Would everyone else please come live on your cameras? I'm feeling a little bit alone here. Thank you very much. So thank you very much, Sarah, for those kind words, and very much to LexisNexis for finally getting us to the point where we are publishing this book. What Sarah hasn't mentioned, by the way, is that the primal force behind this book has been Sarah herself over the last 2 years. And I can't count the number of meetings that we've had going, yeah, you know, it's not ready yet. We need to wait a little bit longer in order to make sure that what we have in the publication is A, correct, and B, up to date. So what you have in the publication is correct and up to date as of the 16th of September. There was a small announcement by SARS, a series of frequently asked questions that were published on the 21st of September. Those didn't make it into the guide, but everything else is up to date. So what we are going to do as three authors, we're just going to work very briefly through 10-15 minutes. We're going to talk about the content of the guide. and a bit later, Gina will facilitate a discussion on carbon tax more generally, I guess. But the purpose of this presentation is not to explain the carbon tax, it's to explain the guide, which I'm hoping most of you have bought. Sibo, won't you please put that set of slides up, if you don't mind, and then we can get underway. Good, excellent. Looking pensively across Johannesburg, thinking about carbon tax. Next slide, please. So the guide is divided into 5 chapters and a series of appendices. The purpose of the guide is to put in a single place with URL references all of the information and documentation that has been published and that is relevant to the carbon tax over the last period of time. So those of you who have been involved with and looking at the development of the carbon tax, you will know that it goes back arguably at least 14 years. So there's a lot of information that's been produced over time. What the guide tries to do is to cut through the chaff, as it were, and to give you an explanation of and a link to the range of documentation that a taxpayer is going to need to become aware of and familiar with in order to complete that tax return and submit the environmental levy account before the end of the 29th of October. So the second last business day of this year, of this month, apologies. Why is that important? Why is that necessary? Well, the manner in which this information has appeared has been piecemeal. So it's very difficult and it's nigh impossible to find a single location where you will get the most recent set of forms, advice, regulations, other than in this guide. So this is what the guide tries to do. Very broadly, chapter 1 is short, it's 4 pages. It's an overview, it's a summary, it's the kind of thing that one might need to explain at the exco level of a company where the CEO might be saying, so what is this carbon tax thing anyway? That's what chapter 1 tries to do. And then each of the other chapters becomes increasingly more detailed. Chapter 2 contextualizes the carbon tax in the broad sweep of mitigation legislation in the country. Chapter 3 looks at the act itself. Chapter 4 looks at allowances and deductions. And chapter 5 really takes a step outside of what carbon tax watchers hitherto have been aware of. So chapter 5 looks in detail at the implications of the Customs and Excise Act. So let's go through those. Next slide, please, Sybil. So I'm going to bounce through these slides. We're going to spend a little bit of time periodically discussing some of the philosophy and ideas behind what was discussed between ourselves as authors and how we got to the final product. Very broadly, chapter 1 is trying to summarize in an easily digestible and quick read. It'll take you 5 minutes to read this chapter, but by the end of it, you should have a clear idea of what it is you're talking about in terms of how to calculate tax liability, where to find the relevant information, the basis of your calculation, how that calculation may change over time, and the administration and governance of the environmental levy. So one of the most interesting, I suppose, evolutions of the regime over time has been for Treasury and SARS to place the carbon tax into the administrative scheme of the Customs and Excise Act as under the excise formulation. That opens quite an interesting door. I use the word interesting advisedly, quite a difficult door to understand the range of administrative and governance actions that are required from the taxpayer's perspective in order to get to the point where you are able to calculate your tax and submit your levy. That's what chapter 5 is all about. I'll speak a little bit about that later. Next slide, please, Sybil. So it is very important to understand that the carbon tax is one of 6 regulatory and legislative mechanisms that is a scheme, a system, if you like, that is evolving under the auspices primarily of the Department of Environment, Forestry and Fisheries, but which has an overlap, which bleeds into the responsibility of Treasury and SARS. The next slide gives you a graphic illustration of that, but the specific content of Chapter 2 is as you see in front of you. So why does South Africa need to respond to climate change? And in particular, what are we doing about mitigating our greenhouse gas emissions and why? Where we fit into the international regime. Our post-2020 mitigation system, which I'll demonstrate to you on the next slide. The greenhouse gas reporting regulations, which quite difficult, it posed a bit of difficulty for us because they were amended as recently as the 11th of September, by which point this chapter had been done and signed. So we had to reopen this chapter and redraft elements of it to take account of the amended regulations. It's probably worth mentioning that those of you who are trying to grapple with your carbon tax return currently this month, the amended regulations do not apply to you. It's the original regulations that will apply. If there's a question on that statement, please let's have it. There's a point made about pollution prevention plans, carbon budgets, and then there's an illustration of how these things are intended to speak to one another. Next slide, please, Sibyl. So there is a 6-component post-2020 mitigation system that is being evolved by the Environment Department. We've been aware of what this looks like for at least a decade now. This was first firmly articulated in the 2011 National Climate Change Response Policy, and it has evolved marginally over time, but not substantially or substantively. The point I'm trying to make with this image is that the carbon tax fits into this post-2020. The system being originated and administered by environmental affairs, but carbon tax being originated by Treasury and administered by SARS under the Customs and Excise Act. If you'll go please to the next slide, Sibyl, and I'll give you an illustration of how these things are intended to relate to one another. So we've illustrated carbon budgets, carbon tax, greenhouse gas reporting, and pollution prevention plans as 3 intersecting circles. And I know that there are colleagues with whom I've discussed this image over time. And there is some discussion as to whether these things should be intersecting circles or indeed perhaps oblongs that abut one another rather than displaying an overlap. I'm still in favor of the notion of an overlap because reporting will speak to how budgets are allocated, and reporting very much speaks to how you calculate your carbon tax. What we do know at this point, and this flows from yet another recent appearance on the scene, which is the amended version of the climate change bill, the 2018 climate change bill that Olivia and I had some hand in drafting. A recent amendment of that bill, which emerged from the NEDLAC process, has now made clear that the intention at this point, at least, of the regulator is for an administrative penalty to apply flowing from the carbon tax to entities that exceed their allocated carbon budgets. So what I'm hoping to illustrate with this slide is that the intention of the regulator is a fully integrated mitigation system across all of these mechanisms that speak to one another. Next slide, please, Sibyl. Now, the next slide talks about chapter 3, so our guides deal with the act itself. And I would invite, please, some comments from Olivia, who was the primary drafter of this chapter, and from Mansour, who settled this chapter. I must admit to you that I was afraid of the number of mathematical formulae that are found in this chapter. So thank you, Olivia, for dealing with that. If you could perhaps make some comments on the philosophy, on the approach adopted in this chapter. Olivia, please.
Oh, thanks, Andrew. Yes, it was drafted with a view to gently walking through each section of the Act, similar to how a lot of legal interpretive guides do in the marketplace. So they work through each of the definitions, for example. It works through the preamble, and then it goes through each of the sections of the Act consecutively with a view to understanding what each section means. We haven't gone through every single word in the Act, but where there are terms that are ambiguous, for example, definition of a person or taxable entity, or certain aspects of the preamble that we think are particularly useful to unpack, we've tried to do that in this particular chapter. What we've also tried to do is to work through each of the formulae for the inputs to the carbon tax calculation. So, for example, we've walked through the calculations of fuel combustion, fugitive emissions, and process emissions. And just to make it a little bit more digestible, for some of you who might not come from a tax background, it's a little bit of a mindset shift to start thinking in formulae. So we've tried to work through some examples of, what P might mean, or what D would mean, and how you might work that out in practice. And so in some of the text boxes, we've given examples. Some of them are similar in format to some of the examples that Treasury itself has released. We've tried to also give different examples. Obviously, they can't answer every specific scenario that might be out there, but it's with a view to answering a broad range of questions that might fall within each of those sections. As the name implies of this Act, it is very much a guide, and I think, as Andrew has said, it's very much an evolving legal system. So we have given or have raised various flags that we've identified in the text, issues that we think require further clarification, things that don't necessarily align with other regulations, that type of thing. But the intention is that as the system evolves and as the regime evolves and as we have better understanding of each of these sections, the commentary in this particular chapter will be augmented in time. Mansoor.
Thank you. I thought the explanation was very comprehensive, Olivia. And you're right, because we're in effectively the first year of implementation of the Carbon Tax Act, we don't have a huge amount of guidance. There won't be any case law at this point. There's the administrative documents issued by SARS are mainly in the form of completion notes and completion manuals. What we do anticipate over the next year or two, going to the future, is as the level of activity, scrutiny increases, the audit activity from SARS, that there will be a lot more guidance which will then flow through into these chapters. And it will provide additional guidance to you to determine the situations that you fall in, because when you're dealing with a single taxpayer, it becomes fairly easy. When you're dealing with a grouping of taxpayers, holding subsidiary companies, people who are combined in outsourcing arrangements, people who are entering into joint ventures, then the identification of the person, which is the data provider, and the person who is the taxpayer isn't always that straightforward. And I think that will be the issues that people will probably be grappling with right now as you are completing licensing and registration obligations and doing your taxpayer returns. And those are the issues that we'll be able to delve into a deeper future iterations of this guide. Thank you.
Thank you very much. If I could just have a point that Mansoor just alluded to. So it was very important for us to get the book out either contemporaneously with the commencement of this first tax period or in advance of the first tax period. It turned out not to be possible to get it out in advance of the tax period because of the information that kept coming from SARS until quite recently, and I'm very grateful for SARS for putting that information out, actually, because it clarified a number of factors. The regime is evolving, so there are elements of this that will, of necessity, need to evolve as the regime evolves. But this guide is not only going to be useful to you until the 29th of October, and then you can delete it from your system. On the contrary, the point of the guide is that it tries to take a much broader and lengthier approach. Carbon tax is going to become a feature annually of administrative and financial processes within companies, and very many aspects of the carbon tax will be repeatable and replicable year after year. So therein lies the value of the guide as you see it now. Sibo, the next slide, please. Chapter 4 is quite interesting from my perspective, because there was something of an epiphany that I had personally in attending a few of the iterations of the online workshops, the webinars that SARS gave, talking about the carbon tax, and at that point, the then imminent commencement of this reporting period. And let it be said that we have not, in the guide, tried to make up things where there is very clear guidance given by SARS. What we've tried in that instance is to reflect that guidance and then to interpret the guidance where it needs interpretation. And in some instances, it does need interpretation. Perhaps it's worth saying that the information put out by SARS is written from SARS' perspective, understandably so and correctly so. It's important, though, for the private sector taxpayer to seek to understand that information from the private sector taxpayer's perspective. And that's what we try to do. We are advisors to the private sector. So the epiphany that I had in listening to very competent SARS officials speak about the regime was to understand that for the last decade, we've been speaking about the notion of allowances under the regime that will permit a taxpayer to limit or reduce its carbon tax liability in some shape or form. The epiphany was to understand that the allowances are not the only thing that the Act provides for, and that by placing the Act within the ambit of the Customs and Excise Act, by placing the Carbon Tax Act within the ambit of the Customs and Excise Act, the door was opened to a series of what SARS specifically refers to as deductions. There is some discussion in Chapter 4 around use of terminology, drawbacks, rebates, refunds, and deductions, so particularly those 4 words, in contradistinction to the notion of allowances. And this table that you're seeing, and the next slide, which I'll come to shortly, this table seeks in a single moment to display for the reader what are deductions, what are allowances, where they originate from a regulatory perspective, how are they reflected in terms of the units that are used, and what information, what confirmatory information is required for a taxpayer in order to demonstrate legitimately claiming an allowance or a deduction. So what you will see here, Sibu, if you'll go to the next slide, please. So as we move to the next slide, it's just a continuation of that table. And what you will see here is the continuing list of the set of allowances. But if you look in the far right hand of the table under paragraphs, effectively what it's trying to do is to say, this guide has dealt with these issues in various other places. And so there is guidance to be had in respect of a deduction or an allowance, both in Chapter 4 and in other areas of the guide. There's a very important further factor about Chapter 4, is that Chapter 4, the allowances and deductions rely very heavily on the series of regulations that have been promulgated over time in terms of the Carbon Tax Act. And true to its nature, true to the nature of the guide, Chapter 4 provides links to all of that information, all of the regulatory information, including the underlying, in certain instances, spreadsheet. So, for example, the trade exposure allowance, the trade exposure allowance regulations were published with a series of trade-related information and spreadsheets. All of that is clearly not included in the guide, but the guide includes links to all of that information online. So I recall you and I had quite a lengthy discussion around this table and the information that we reflect on the table. Do you have any remarks to make around the content of Chapter 4? I mean, I know, for example, that you gave very particular drafting input. You assisted me a lot in framing the section on trade exposure, I think it was. Any remarks from you on that?
I think the key point to make is that when taxpayers are licensing themselves with SARS to obtain the license for carbon tax, there's a few forms that needs to be completed. And in one of the forms, you're required to state the rebate and tariff items and rebate codes that will be manufactured or stored in your warehouse. So that's moving into the custom side, but that translates into the allowances. So you have to be clear in the licensing application, effectively the allowances that you will be claiming when you submit your carbon tax return. Now, the approach that I've suggested is a belts and braces approach that we've suggested, is that when you do the licensing, it might not be that clear whether you'll be claiming all or the bulk of these allowances, though the basic tax-free ones will apply automatically. The others will be dependent on a number of other factors. And what we've been saying is that in the licensing form, it's best to rather specify all of the allowances that exists, from basic to performance, to trade exposure, to carbon offsets, carbon budget. And when you do the return, then claim those allowances for which you qualify. Because at least that way you would have mentioned this, we would have listed these in the licensing application. And when you do the carbon tax return, the submission, you can then specify the allowances that would be applicable to your operation. There's also an issue, Andrew, that emerged out of another discussion that we had, and that is it ties in with the variety of government departments that's involved. So if a taxpayer, for instance, wants to claim the carbon offset allowance, there's a number of steps that must be taken in order for that to occur. And it may very well be that taxpayers find themselves in the position that they would have qualified, but maybe they never got the extended letter of approval or some other document that they need. The forms themselves do make provision for if carbon tax was underpaid or overpaid in the previous period. And then this leads to a very interesting issue whether if you would have qualified for an allowance in a year, but you were unable to claim it because there was some delay in getting the paperwork from the relevant department, and that leads to an overpayment of carbon tax in the 1 year. How do you deal with that in the second year? Can you say there was an overpayment and that therefore you're going to be paying less in year 2? Do you compare that to the refund procedures in customs? And I think that these will be some of the questions that will arise as the different regimes gets all their systems and people into place, that everything might not become operational at the same time, and hence there might be delays or leakages in the ability to claim some of the allowances. Thanks, Andrew.
Thank you, Mats. I actually would like to pick up a point that you've just made and then respond to a question that I see that's been asked. So the question is, do we think that there's going to be a delay related to COVID? Absolutely not. The season is open and processes are underway. The important question, though, is if as a result of some sort of administrative delay that is not my fault as a taxpayer, that has to do with some sort of governance or administrative process that I'm relying on because there are so many other different government departments involved. Let's say, for example, I'm unable to claim my carbon offset allowance in this particular year because I'm unable to list my offsets on the carbon offset administration system. What is the consequence of that? Mansour has made a really very important point, is that coming to the end of a particular filing season doesn't necessarily close off all of the considerations relating to that filing season. There might be issues to keep in mind for the following year. If there are particular questions around that idea, so no delay. The season is open and processes are already underway. Next slide, please, Sibo, and we are really close to the end of this set of slides now. So all I want to make, the point I'd like to make is this, is that for a decade, we were looking at various iterations of regulations, the drafts of the Carbon Tax Act, and we were all very focused on what the Act had to say. And then at the 11th hour, the Customs and Excise Act becomes the administrative framework for the entire system. And the Customs and Excise Act itself adds another quite complex layer of governance administration that both SARS has to deal with, although SARS, I guess, is a lot more au fait with dealing with the Excise Act than will be a number of carbon taxpayers who are not, who have not previously been excise clients of SARS. So I'm not going to go through the detail of Chapter 5 because it is quite in quite exquisite detail, but Sibo, if you'll go to the next slide, please. So very broadly, Chapter 5 deals with an analysis of the relevant provisions under the Customs and Excise Act, and then it looks at licensing. What do you need to license and why? What forms do you need to fill in? Next slide, please, Sibo. And then the Chapter 5 continues with the calculation of the environmental levy and indeed what further forms and annexures to the forms that you need to fill in. Importantly though, Chapter 5 is a combination of line-by-line analysis of the rules, the SARS administrative rules that have emerged, and a synthesis of that information with the information provided by SARS itself in relation to the content of the forms. So in that way, Chapter 5 is an unusual blend, if you like, of information specifically provided by the regulator and information interpreting the regulator's information and adding other layers and other perspectives. Next slide, Sibo, which I think may be the last slide. No, sorry. So the last element of Chapter 5 is incredibly practical and quite prosaic. You need to click on this link to fill out a form in order to register for e-filing. You need to submit your tax return by following a series of prompts in a wizard online on the SARS e-filing system. There is a short reference to auditing. You need to obtain your information either electronically, or I found this to be rather amusingly, if you're going to retain your information in hard copy, then it must be in a fireproof safe, which I must admit is not something I'd previously considered. There is a short reference to administrative action and appeals, record keeping. That's where you'll find the reference to the fireproof safe and penalties. So that's the end of the presentation on the content. See, if you want to go to your last slide, which is a holding slide, and then Sarah, it's back to you, please.
Thank you, Andrew. Allow me to introduce our panel discussion facilitator, Gina Downs. Gina currently holds the position of Corporate Advisor, Environmental Economics in Eskom's Climate Change and Sustainable Development Department. She graduated with degrees in zoology from UCT in Stellenbosch and received a postgraduate diploma in economics from the University College of London. With nearly 30 years of experience working on different aspects of environmental management within Eskom and for the past 10 years, Gina has been engaged with the discussions around the formulation of the carbon tax and its implications for Eskom. Thank you, Gina. Over to you.
Thank you, Sarah. Thank you for that gracious introduction, and welcome everybody to this opportunity to engage with the keenest legal minds on the Climate Change Act at the moment as it evolves. You've seen an overview of the concise guide to the carbon tax, and we all agree it's very timeless, given that we need to do our declarations and submissions and payments by the 29th of October. And it's kind of come upon us quite suddenly, really. If you remember that discussions on this issue started way back in 2010, and I think progress on the design and development of the tax has come in fits and starts up until this point. And it's often been informed by developments, as the speakers have already said, in other departments. So it's not always just been a tax issue. It's often been an environmental climate change issue, and at other times it's been a finance issue. And so I would like to take the opportunity just to get the conversation started with our three panelists. The first question is certainly from my experience. You heard from Sarah, I started with a zoology degree, so certainly natural science background. And for me, it was quite a shock to get involved in the economic side of things, and even perhaps more of a shock, Mansour, deepest respects, on the tax side of things. And so I wanted to ask our three panelists, and I think if we could start with Olivia, then go to Andrew, and then Mansour, in that order, just to give us an idea of how difficult did you find it bridging the terminology and the perspectives that you come at from your different backgrounds. It must be quite hard for a lawyer, not if you haven't done any environmental stuff, to understand carbon dioxide equivalence, just that kind of concept. So I would just like to hear from each of you, as you worked to put this book together, where did you find those conflicting views and perspectives? And will this guide help us to bridge those gaps and those terminology issues? If we could start with you, Olivia.
Thanks, Gina. And I think you've highlighted an important point. And I know we've both been in meetings together where it's been raised that the nature of this type of tax really requires a lot of collaborative disciplines across the table. And that's particularly true for any company that wants to deal with it. So you'll need someone from the finance department, you'll need someone who works in safety and environment to help with the greenhouse gas monitoring side. You need someone from an exco level to sign off on it, and from a strategy point of view. You might need some process engineers at the table as well. So it's very much multidisciplinary, and I think especially as environmental lawyers, Andrew and I are quite used to working in multiple disciplines, and as lawyers generally, you're required to adapt to the subspecialities you're presented with, and so you quickly get on the bandwagon and learn what COTE means, or what thermal megawatt output means, and boiler capacity means, and that type of thing. And it makes it quite interesting, honestly, at the end of the day. I'm lucky enough to have an economics background, which helps me, but exactly why we have Mansour with us as well, who's very seasoned in the traditional tax and customs and excise elements. And so I don't think we could have ever written this book by ourselves. It's been very much a conversation between Mansour, Andrew, and I over the last 3 or 4 years, speaking from different disciplines that we approach it with.
Thank you for that. I must say that we have experienced that as well, of course, in Eskom, and have managed to reach hands across those different disciplines, exactly the ones that you have actually described. I think it may be significantly harder for smaller companies where they don't have all those specialized skills available to them. Thank you, Mansour.
Thank you. Yes, when you mentioned the point about you doing the crossover to tax, that I had the same experience trying to become familiar with the environmental law side. Because normally when we look at tax legislation, we have a tax base that's measured in rand, and we work out what's the taxable income and the amount of taxes to be paid. When it came to carbon tax, the tax base is measured in greenhouse gas emissions and is determined in terms of the greenhouse gas reporting regulations, and required an understanding of how that set of regulations work, and dealing with issues of data provider versus under greenhouse gas regulations versus taxpayer for licensing purposes, dealing with issues of the capacity thresholds to determine whether taxpayers will be required to obtain a license, understanding terms such as operational control to determine which entity is required to register, dealing with the different scope of the definitions. Data provider, a lot more expansive, that brings in holding companies, subsidiary companies, facilities over which the entity has operational control. Whereas taxpayer, much more narrower, focuses on the person conducting the activity and doesn't expand it to include other entities. And also just when you're dealing with the form, and you have to tick, am I a Section 4.1 taxpayer, am I a Section 4.2 taxpayer? And you look at the logic behind it and how it relates to the tiers that's used for reporting purposes under greenhouse gas regulations. So I think what this has shown is the need to work together. And with the price being put on carbon, it does create very interesting governance questions within corporates that previously the management of greenhouse gas reporting would have been done in a certain way. And now you find, because a tax has been put on this amount and one needs to license with SARS, it might lead to companies having to re-look at the manner in which they did the data provider registrations historically. So there's been some very interesting issues that's arisen in trying to get an alignment between these two regimes. Thank you.
Yes, thank you for that. And the more you speak, the more I feel that there are still going to be numerous issues that come to fore as we learn by doing. You talk about, we've spoken about the amended reporting regulations. There's also a monitoring and verification guideline that's been drafted that was up for comment. And that also speaks to timelines that could affect carbon taxpayers. So this is definitely an evolving area. Andrew, over to you.
So thanks, Gina. I'll make a very quick comment and then actually have a question for you, because you said a really interesting thing that I'd like to ask you about. I've been very lucky. Climate change law and carbon law chose me in 2003. It took me by the scruff of the neck and said, this is what you are going to do. And so these kind of ideas, I've been very fortunate enough in the last 17 or 18 years to work primarily in multidisciplinary teams. As a lawyer, I probably know more about landfill gas than is healthy for a lawyer to know about. But I'm going to answer your question very specifically. And the question was, so what did you learn in essence? Well, I'd never had to engage at all with the Customs and Excise Act. And I must admit, I was a little bit afraid of the thing. It's huge. It's an act of 300 pages long. It's got 700 pages of rules and an equal number of schedules. But I suppose it's a bit like eating an elephant, one mouthful at a time. The usual approach that you adopt as a lawyer in order to understand legislation, of course, applies in terms of the Customs and Excise Act. So what does the empowering provision say? If I can find the empowering provision in 700 pages of rules, then I can move on to the next step, which was, okay, well, that empowering provision relates to a rule. What does the rule say? And it was that exercise. It was really interesting for me. And that's really the nub of Chapter 5, is to unpick all of those processes. So that was one of my big learning curves. Can I ask you this question? You've mentioned that within Eskom, you've been able to solve that conundrum of having the different disciplines and the different departments speak to one another. We have for years, this group of authors has for years been saying to clients, you've got to understand that this tax starts primarily as an exercise of reporting, probably done by your air quality or your environmental specialist. but it soon transmogrifies into a real tax. I spent time arguing with academics. An academic wonderfully said to me at one point, oh, but the carbon tax is not a real tax. That's why we don't teach it in our tax course. I went, oh, okay, well, watch the space in terms of real tax. But I'm curious, how have you gone ahead in Eskom doing? Has it been a very deliberate approach? You're muted.
Yes, thanks, Andrew. Yeah, so because I think we've been fortunate, it's been on our radar for a while. And so we have been able to pick up also the developments as they happen. I think anybody starting now is going to struggle to bring everything together, and that's one of the values I see for this guide that you've produced, because as you say, there are so many different threads that you have to hold on to. So we very deliberately worked towards compliance, and we started this process already about a year ago. So all the necessary departments were identified. There was delegation of authority to participate in the process, and everything at the end of the day in terms of finance, always you have a procedure and a guideline. I think where we have really had to work though is with the finance and the tax practitioners trusting the emissions reporting processes. I think that's been a big one, especially as those regulations are amended and things change, and sometimes it's been a little bit of a leap of faith that everything will come together at the end. Yes, but it has been an interesting journey.
Once you pick that last statement apart, which is this, I mean, ultimately your tax liability depends on a choice made by how you report. And that's been a very difficult issue for tax professionals to come. Sorry, I know you're facilitating us, but I'm fascinated by this discussion. I feel you need to write an academic article on what's happened in Eskom in terms of facilitating this. Over to you.
Oh, that's very kind. Yeah, I think on our side, I really give a lot of credence to our CFO, who has actually been involved in the discussions with National Treasury that we engaged on in the last 5 years, 10 years. So we've had that really senior level involvement and confidence to go ahead and do, which has been really great. I think it's a different size for different people. As I mentioned, Eskom is the largest single emitter. So other companies, I think, are going to have slightly different experiences in this regard. So one of the things I did want to ask as well, you did mention that this guide is up to date as of the 11th of September.
16th.
Sorry, 16th? And I was just wondering, as things change, because for instance, you mentioned the Excise and Customs Act. I know every year we get a tax law amendment bill. And if you're an environmental person and you're relying on your SHE legal register, you may not have this tax law amendment bill on your radar at all. And it might hit you from left field. So do you guys have plans to update this book? Maybe after the first filing with lessons learned and as things change?
So your thoughts, Olivia?
We do. Sarah has promised to take us to an elaborate socially distanced dinner to discuss the update.
Yes. Very elaborate.
But yes, no, it's on the cards.
Yeah.
Well,
And we do envisage regular updates to the guide, because in future years there will, as litigation develops and cases start getting reported, more and more guidance will be given, which we will then try to incorporate into the guide. Yeah.
Oh, that's great. It leads me to my last question.
If I could make a point, so this is now legitimately part of your SHE legal register. If the register is not dealing with this, it absolutely, it's an environmental levy.
Yes.
You know, the clue is in the name. It needs to be dealt with. If I could make one very quick point though, so the approach taken in Chapter 5 is to, so forgive me using this word, is to demystify how the Customs and Excise Act works in respect of environmental levy. I am not claiming that we have demystified the Customs and Excise Act. No ways. What we've tried to do is unpick the Customs and Excise Act in relation to environmental levy, then this environmental levy, then the rules applicable to this environmental levy, then the schedules to the rules applicable to this environmental levy, which means that that entire string can be followed in subsequent years, because what will be self-evidently what will happen is that in subsequent years, because the whole framework has now been established, SARS would be able to amend a rule or a schedule to a rule in order to take account of that tax year, rather than doing this entire process again. And that's why the book is foundational, because it sets all of that up so that next time you don't have to read it all again, but you know where to go and look for the next iteration.
Yeah, well, that would be very useful, because I know when we were proceduralizing our compliance with the carbon tax, you know, you'd suddenly find a Schedule F Part 3, and it would be, I don't know what that is or where it comes from.
Read the book, you will find out.
Thank you very much. So my last question is looking a little bit future before we dig into I know a lot of participants would like to take advantage of this opportunity to ask you a lot of detailed and urgent and immediate questions. But and Mansour did talk about how there will be litigation and developments even in this first phase of the carbon tax. But I did want to look a little bit ahead, because you have that chapter, I think it was 2, on the strategic management of carbon, and a bit of a discussion on how all those things align and relate to each other. And I know that National Treasury have promised to review the tax in 3 years, after at least 3 years of implementation. And so I was wondering, from what you've written and from what you found, if there were key issues where you would perhaps like them to address in their review, if you have big areas or little areas where you think a review could really assist as we take this legislation forward. Could we start with you, Olivia, and then we'll go the same order, Andrew and Mansour.
I think for us, or at least for me personally, the issue of operational control has been bothersome to a lot of companies trying to unpick the relationship between different entities who either have some degree of physical, or it might be indirect company control within a constellation of entities that could be potentially liable for the carbon tax. And I think Mansour picked up on this a little while earlier, if I'm remembering correctly, when he talked about we might want to see a little bit more guidance issued by SARS on what that might mean for them. But that is one of many issues, I suppose. It wouldn't just be on SARS's side, it would require better drafting, I think, of the greenhouse gas reporting regulations. Unfortunately, even the most recent ones make the situation worse. So that would be one issue close at hand. And I think some elements of the climate change bill will also need to be finessed, definitely, over the next couple of years. So actions from all departments. That's it.
Thank you, Mansour.
Yeah, I guess the first issue for me is the timing of that review, because they did say when the Carbon Tax Act is passed into law that the impact of that tax will be reviewed after at least a period of 3 years has gone by. And 3 years from 2019 takes us virtually into the second phase of the carbon tax, carbon tax. So if the idea is to conduct a review at the end of phase 1 in order to consider what changes to be made for phase 2, then we're going to have quite a short period within phase 1 And I wondered there'll be enough data that would have been accumulated at that point to make some proper judgments about the extent of that review, given that one of the declared purposes of the review is to consider the levels of the tax-free thresholds. So what I'm hoping is that when the review is conducted, there's at least a sense given as to the amount of allowances claimed by taxpayers, i.e. the amount of revenue that's been forgone through things such as the carbon budget allowance, carbon offsets allowance, performance allowance. Because if very few of those allowances were claimed, that might point to systemic issues that needs to be fixed. So what I wouldn't want to see is simply a broad number that the allowances cost the fiscus X. I'd like to see a breakdown to see what the spread has been between the basic going through the balance, and also that the timing be declared well in advance, so that we know when it's going to take place, and that there be the review schedule or sheet that will be issued inviting taxpayers to comment gets followed by a workshop for those who've submitted inputs before it gets incorporated into the budget of the following year. So I'm hoping that those steps are made part of the review.
Thank you for that comment. It would be great to have a workshop at that point. I agree, to understand the comments that have been made. And National Treasury have indicated that it's been quite unusual, the amount of consultation they have expended, I think, on this carbon tax development. But I think it has worked well to create that platform for discussion. So I do hope it continues. Sorry, Andrew, the last word to you, and then we are running out of time. So to Q&A and Sarah after your last remarks.
So it's very gratifying when the predictions one of these has been making for years come to pass. So one of the things the three of us have been saying is that the carbon tax, particularly within the application of the carbon tax to the carbon offset allowance, is going to do a couple of things for the local carbon market. Firstly, it's going to reinvigorate the carbon market locally, and it's going to insulate the carbon market from international developments. Both of those things have happened in the last 4 months. The review, though, of the carbon tax system will absolutely need to take account of how the international carbon market has evolved 3 years from now. So at the risk of using jargon, my apologies, we are currently able to apply a carbon offset to a carbon tax liability if it's generated under one of three international standards. One of those standards is the Clean Development Mechanism under the Framework Convention on Climate Change. The future of the CDM is in doubt at the moment. And so consequently, one of the most important sources of supply of offsets to the South African local market is itself in jeopardy. Now, there's a very interesting process that is currently being driven by the DMRE, which is a process to move towards the use of local carbon standards to generate offsets. Again, very forward thinking, the kind of thing you haven't seen in any other developing country, and potentially very important for the local market. 3 years from now, I'm hoping that diagram that I showed of the three intersecting circles, I think it's called a Venn diagram, if I remember my standard for mathematics, that Venn diagram will be clear, that we will know where the overlaps are and how they work. Thank you very much.
That was really insightful. Thank you, Gina and panelists. I see a lot of the delegates are already using the question and answers tab at the bottom of the screen. And we have a number of questions already, as well as ones emailed through. So if we're unable to answer all of these questions in the time that we've allocated, we will send you a summary of the questions and answers and distribute this after the session. What I'm going to do is start with one of the questions that was emailed through, as it's quite relevant to everyone. And that is, what are the steps that carbon taxpayers should be taking at this point?
So
Should I
they need to,
keep on that?
no, please,
Okay.
no, go, Mansoor, please, you go ahead.
Yes, it's the licensing that's critically urgent. SARS indicated that they want the licensing applications to be in by the 30th of September. So taxpayers are past that date. You should probably allow for a 30-day period from the date that the licensing application is submitted to the date that you get the letter confirming the license for your warehouse. And that period could be extended as well, depending on the number of applications coming in. So it does create a problem, given that the carbon tax payment must be made by the end of October. And if you don't have the licensing in place as yet, you won't be able to make the payment. So that would be the most critical issue. But even for those who submitted close toward the end of September, it's going to become pretty tight if you get the letter fairly close to the end of October. So what you should do, I think, is to complete the carbon tax return, the DA-18, the environmental levy account, as soon as possible. Complete all the calculations so that the moment the letter comes through, and if it's towards the end of October, you're able to finalize the e-filing and do the payment hopefully before the end of October. I couldn't find any clear guidance on what would happen for taxpayers who submitted their licensing applications before the end of September, but who might only receive their letters after the end of October, say in November. Because normally what SARS, if you make a late payment, they issue, they slap you with late payment penalties. But if you've applied in time, but simply due to the flood of applications coming in, you get your letter late. I don't see any clear note on what would happen in that regard. But I think the most critical thing is to finalize licensing applications, get them in, and then do the prep work for the carbon tax calculations so that you're able to submit the returns. And if you're having difficulty with the forms, then you're able to contact the SARS unit to clear up any issues which they invited taxpayers to do during their roadshows. So filling in the environmental levy accounts and doing the calculations as early as possible will allow you to pick up issues that can be clarified with SARS. Thank you.
If I may just add, in the roadshow was really, really interesting because it was able to do this kind of thing, ask questions kind of to SARS as they were going. So I suppose two things just to pick up from there. Although SARS has requested for licensing applications to be in before the end of September, that doesn't mean they stop at the end of September. In fact, SARS was quite explicit to say licensing applications and renewal of licensing applications are year-round. So they continue notwithstanding. So that's quite important. So please don't think that because you are beyond the end of September, somehow you cannot submit your licensing application. On the contrary, confirm what Mansoor has said. Go ahead and do that.
Moving on to another question. I understand I cannot claim the Energy Efficiency Savings Allowance if I'm also claiming carbon offsets. Andrew, do you have any comments on that for us?
So thank you, Sarah. So this question has come up quite a lot. So I'm going to be a lawyer and I'm going to say, this is not legal advice. This is a series of thoughts that we've put together primarily by thinking, who's responsible for this. Just to give a thought on this. What we know is that a couple of requests have been made to the SARS helpline to resolve this question. So the question is, if I'm claiming the Section 12 capital L Energy Efficiency Savings Allowance, can I also claim carbon offsets? Now, the principle that Treasury has expressed around what it calls double benefit is that double benefit cannot apply in respect of the carbon tax and the carbon offset regime. So that's the first principle that Treasury has been at pains to stipulate over years. What's important, though, is that principle has been in the system right from the beginning, so for a very long time. Over time, the notion of carbon tax liability has evolved from being attached to an entity or arising because an entity conducts or emits greenhouse gas emissions to the situation now where the question to ask is, does a person conduct an activity. That shift to activity is quite important, because all of the philosophy and thinking that you will see in all of the documentation from SARS, and indeed in the forms, in the DA 180 form and the annexures, deals with individual activities. And so I think there is an argument that can be made that if I am claiming a Section 12L allowance in respect of a particular activity and I am taxed on that activity, then the principle of no double benefit means I can't claim an offset, a carbon offset, in respect of that activity. I can choose, however, whether I want to claim the Section 12L or the carbon offset. That's the first point. The second point is this. If I am conducting an activity in respect of which I am not claiming a Section 12L allowance, I'm entitled to claim the offset allowance. What is important to understand here is that the allowances and deductions apply to individual activities. So you don't calculate your gross carbon greenhouse gas emissions, slap a carbon tax on that, and then remove the allowances. You calculate your gross emissions per activity, and then you apply your allowances and deductions per activity. Well, the allowances certainly. And I think that is the way to argue that if I can separate per activity where my carbon offset allowance and where my Section 12 saving allowance applies, then I should be entitled to claim it. I will say that it seems that information has been provided, is circulating in the market, is that the answer is carte blanche, you cannot apply. You can't apply for, you can't use offsets if you're also using Section 12L. I think that response is insufficiently nuanced. And I think that's one of the things we're going to see develop. Gina, do you have a comment on that? I mean, I know we were discussing this earlier.
No, not particularly, Andrew. So Eskom was originally not one of the SIC codes that were able to claim a 12L deduction. So it hasn't featured so greatly in our conversations.
Good. Thanks, Sarah.
Mansoor, I guess this one's for you. Do the authors consider the application of a carbon tax, a carbon budget, and a penalty on emissions over the carbon budget to be a form of double taxation?
Thank you, Sarah. I guess we'd have to see what form the legislation will take. Now, some of the discussions that's been taking place at this moment is how to integrate the carbon budget with the carbon tax during the second phase of the carbon tax. And the current proposal on the that's being considered is that taxpayers whose emissions are within the carbon budget will pay carbon tax according to the rates in the Carbon Tax Act. Taxpayers whose emissions exceed the carbon budget will pay an additional amount for that portion that is the excess emissions. So the question then arises: is that a form of double taxation according to the question that's been posed? We probably have to see the exact form that it takes, but I think the argument that would be made as the reason why it's not is that those emissions within the carbon budget are not taxed again. They're taxed at the rate in the Carbon Tax Act. It's only the excess part of the emissions that's taxed at the higher rate. So those emissions within the carbon budget are not suffering a form of double tax. They're being taxed once. Those emissions in excess will be taxed at presumably a punitive rate in order to encourage taxpayers to reduce their emissions, to bring it to within the carbon budgets. I think what it does illustrate is how important the whole carbon budgeting process will be for taxpayer companies, because it won't simply be a case of agreeing a budget and then trying to stick within it, but it could have pretty severe tax consequences for companies who exceed those budgets. Thank you.
Thank you. The next one is, what does a taxpayer do that has fugitive emission sources not catered for on Form DA180, B1 and B2?
It's enormously specific. I'll offer a view, and I ask my colleagues to comment. So there are going to be some instances where there is no answer. And you're not going to find the answer to that question in this guide. The guide is a generic and a generally applicable discussion and analysis of what goes on. While you can get quite far down the road of understanding how to deal with a carbon tax, it is absolutely essential to get specific advice on the specifics of a particular situation. So this is a very particular situation. Taking a robust approach and from a kind of a lawyerly perspective, my immediate response would be to say, if you are able legitimately to exclude those emissions from tax liability, then do so, but be very clear as to why you are doing that, and be aware that if you are trying to exclude some of your emissions from tax liability, which emissions that you've already reported on SAGES, on the South African Greenhouse Gas Emission Reporting System, then there is going to be a question raised by the regulator, by SARS, as to why you have reported under environmental affairs, but you are seeking to exclude some of those emissions for tax liability. So, comments, Olivia, Mansour, thoughts, please?
Look, it's a tricky one because the form is issued by SARS. So if the form doesn't match the legislation, then it's a big difficulty for a taxpayer. I would make use of the SARS email address that they gave to us during the show, because this is a question of how do you cater for these emission sources on a form where there's no block in which to input the data. And we've seen it happening before in other pieces of tax, where an incentive is inserted into the Income Tax Act, but the income tax return hasn't been amended to create the drop-down box to enter the details to claim that. And then normally gets fixed in the next return process. So I would suggest that this question gets posed to that SARS carbon tax unit to say, what does a taxpayer do in those circumstances? Maybe an annexure needs to be attached to the DA180 form to reflect the emission sources that's not catered for on that form itself. But I would suggest making use of that source to get some initial guidance on that form.
If I may make a comment on the use of the SARS phone and dial-in and the assistance. Yes, absolutely, it's there. Please use it. Please use it circumspectly, though. It's perhaps more appropriate to use it to ask questions about process rather than to ask questions about interpretation of legislation and how the legislation applies to your specific activity. My strong recommendation is get a specialist, a private sector specialist, to do that.
Thank you. The next one is interesting. In its current version, does the Carbon Tax Act apply only to immovable emitters and assets, such as manufacturing plants and factories, or does it also apply to movable emitters and assets like trucks and logistics?
You know, from what I recall in the list, the activity list in the schedule to the Carbon Tax Act, there is a category for transportation. It might specifically refer to road transportation, where they've got under the threshold, they have the not applicable entry, which means that in contradistinction to none, where any emissions would make you liable, not applicable means that it just doesn't apply to you. So you're excluded from having to license yourself as a taxpayer. So obviously, I'm speaking from memory as to the form, but you might just need to check on the schedule to the Carbon Tax Act, because I think that is where the road transportation has been excluded because of the not applicable that's been listed next to that. But that would be easy to check. It's just obviously I don't have the act open in front of me right now.
Olivia, would you make a comment on this? Sorry, or Gina, my apologies.
No, I'll let Olivia go for it.
No, I think Francois is right. I also can't remember what it says next to road transport. I mean,
yeah, I think I would have to check the Schedule 2 that it says not applicable, but it would make sense if it said not applicable because the carbon tax itself has been calculated and put onto the fuel for those modes of transport.
Yeah.
So when you buy your petrol and your diesel at the pump, you're already paying the carbon tax. I would say in Eskom's case, we do have a small domestic aviation, which is still a movable asset, if you want to call it that. And for that, we do have to declare and pay carbon tax. There we are not using petrol and diesel, though it's obviously jet gasoline, jet fuel.
So if I could offer something very specific. So the one thing that we were unable to deal with because it came out on the 16th of September is a set of frequently asked questions which SARS published on the carbon tax page of the excise website. And that set of frequently asked questions does deal with this. It's quite a lengthy discussion, but effectively it explains what all three of my colleagues have just said. Around there is an element of the calculation that includes and then later excludes particularly diesel and petrol, but doesn't deal with.
Thanks. I do have that, so I'm happy to make it available to all the delegates after this session as well.
Please, that would be great. Thank you.
Olivia, is there a threshold or carbon emission limit that is set for corporate companies?
I think it might have been Zolda's question. I guess as a general guidance, we would direct people to Schedule 2, which specifies different thresholds depending on the activity you undertake. So there's no generic threshold to indicate whether one person is in or outside of the carbon tax net. Rather, the question is, are you undertaking a listed activity in Schedule 2? And if so, you would need to find that activity that you undertake and consult the specific thresholds that have been developed for that activity. So it might be based on the amount of megawatts generated or the volume of bricks produced per month, that type of thing. And that would be under the activity threshold in Annex Schedule 2.
Thank you. The next one refers to a misalignment between the NGR and carbon tax in terms of registration of facilities or emission generation warehouses, specifically regarding the generator.
So I'm trying to understand that question. So let me adopt a lawyerly approach. Rather than trying to comment on whether there's a misalignment, is to say the following three things. It's quite clear who needs to register, who needs to license under the rules under the Customs and Excise Act. So you need to license your facility. Under the 2017 greenhouse gas reporting regulations, there was some uncertainty in the market. There was some advice being given around where the registration obligation lay and where the reporting obligation lay. And that there was a differentiation in some of the advice that was being given, probably based on fairly reasonable interpretations of the regulations, but they could be interpreted in different ways. We were always in favor of the notion that certainly the reporting obligation was based on cumulative. So if you were conducting an activity and your cumulative installed capacity was over the threshold capacity for that activity, then you were required probably to register and report. The amended regulations have differentiated that under the reporting process. So very broadly speaking, if you fall, you need to register everything but report only those that you, in respect of which you are above the threshold. I think that's the correct thing. So again, without them being in front of me. So there is misalignment, but it's not necessarily a hurdle if you apply your mind to the specific question. So if there's a specific question that is posed. So for example, I have 5 facilities. At each of the facility, I'm conducting the same activity, but each of those facilities is only 2 megawatts of installed capacity. They're separate facilities, therefore I neither have to register nor report. Incorrect. You are conducting a listed activity and your installed capacity for that listed activity is equal to or above the 10 megawatt threshold. The fact that they're in different locations is irrelevant. You are required to register and report.
I think this question might also have been aimed at the fact that he doesn't have to submit 5 applications. It will be 1 licensing application and will obtain 1 consolidated license for the totality of all of the emissions of all the standby generators. So there'll only be 1 application going into SARS. What you'll do in the form, the licensing form, is you will list the different generators. So you just add annexes to the 1 application form, but then you submit them together, and then you get 1 license confirming that. It's a problematic area because taxpayers who are only in the net because they have standard generators which exceeds the capacity threshold will report those emissions, but in the calculation, they might be able to then exclude the petrol and diesel emissions for the same reason that they would have paid the carbon fuel levy already. So it's one of those quirky areas where your installed capacity might require you to license, but you don't actually have a tax liability because when you do the calculation, the petrol and diesel emission that comes into the calculation, then it gets taken out.
Thank you. With the imminent climate change bill, does the carbon tax guide provide insight into the carbon budget system, and will the introduction of the carbon budget system introduce a multifunctional carbon tax system with an interplay between the cap and trade ETS system and carbon tax?
I'll get to that, Sarah. I think Andrew touched on this slightly earlier, so going back to that Venn diagram of how the intended alignment between the revised bill that we've seen coming out of NEDLAC, which seeks to impose an administrative penalty for exceedance of the carbon budget as some type of punitive measure under the Carbon Tax Act. So this idea that if one exceeds the budget, you would pay a higher carbon tax rate. Whether that will evolve in time into some type of ETS or emissions trading scheme, that I think very much depends on what happens with the offset regulations. There are a number of issues, and I think this might answer, I think, a different question that was posed earlier about layering emissions in the Act. Those regulations have a number of problems with them, and we're not quite sure how they will play out in practice. They currently, or they have operationalized the carbon offsets administrative system, and seeing how that goes in theory, we might see the trade of carbon offsets ultimately evolving into a form of ETS that one could possibly use as an analogy to what we're seeing in the EU, but I don't think we're quite there just yet. But it is promising at least to see that there is some alignment between what the climate change bill is now saying and the Carbon Tax Act. Andrew, any thoughts?
Thank you.
Yes, if I may. So that last point, really, really important. The formal position of Environmental Affairs at the moment, and I'm basing this on a document produced by Environmental Affairs a year ago for workshops, which they ran on carbon budget. The formal position is that there is going to be no form of emissions trading within your carbon budget. Now, Olivia's made a really important point, is that it's a regime in evolution. Might that position change? I hope so, because I think it would be a very interesting proposition if one could trade within a budget, which would be analogous then to something like the European Union Emissions Trading Scheme. However, it's currently the policy position that there will be no such thing. Please bear in mind that is a theoretical idea anyway. The local carbon market is already bursting back into vibrancy because of the use of the offset allowance under the carbon tax.
Right. Unfortunately, we're now out of time. So as mentioned earlier, we will provide the webinar recording and a summary of the questions and answers after the session. And if I can just ask for a closing statement now from each of the panelists, starting with you, Mansoor.
Thank you very much. This hour and a bit has gone by very quickly. It's been a fascinating discussion. Thank you to my co-authors and to LexisNexis for getting us to this point of the publication of the guide. So thank you to Gina for moderating the discussion. And I think what the questions have shown is that there are very intricate issues that needs to be considered in the carbon tax. And I wish everyone well with the filing season. Thank you.
Olivia?
Yeah, just to thank everyone again for your time. I think just going through this reminds me how we'll actually need to start working on the revised update probably now. This great irony of drafting something in an evolving regime, which is good because it keeps us on our toes, and it's been quite an educational experience drafting this guide. I know Andrew and I have had conversations between ourselves constantly saying how you can attend a presentation by Treasury, but until you've actually sat down and worked through each and every single word in the Act and in the associated rules, you're really forced to dwell and think about what it means. So I know we'll continue to go through that exercise, and it's been helpful to discuss it collaboratively on this table. So thanks again.
Thank you. Andrew?
So thanks, Sarah. So thanks to my co-authors and to Lexis and to Gina. I'd like to, so Karen Iton, thank you, Karen, has thrown out a rather interesting question. It says this: hi Andrew, this tax has been 10 years in the making, yet still some people treat it as a surprise. Do you have a view? I have a number of views, but I'll keep to my most diplomatic view. I think that some people might be treating it as a surprise for the very reason that it is an exercise in multidisciplinarity. It's the point that Gina made, is that you've got different departments within an organization who, up until this point, have pretty much got on with their own business in their own silos without ever having to know what the other one does. Now, the environmental department and the air quality department has to know intimately what tax does and vice versa. And I think there's been resistance in breaking down that internal corporate wall. And I'm hoping that the tax will push towards that greater integration of conversations within companies. So thank you very much.
Thank you. And thanks once again to all of you, all of our panelists and our facilitator, Gina, for sharing your insights and your expertise with us. Very sadly, we weren't able to have the physical book launch we had planned, but many thanks to all of you delegates for joining us to celebrate the launch of this guide. As you can see on the screen, the ebook is already available, and you will be able to pre-order the print version. Both of these can be ordered on our online bookstore. And we trust that you found our session useful, and we look forward to connecting with you again soon. Stay well and safe.